Good evening, everybody. This is Johnny Seville, and this is your executive summary for stock setups for Thursday. Let's have a look at the S&P 500. Now we've had the S&P 500 obviously set open range. Now the open range, of course, was set on Monday to high of 2439.17, low of 2428.69. We have not broken above or below that yet. The S&P 500 on the hourly chart, as you can see, coming up here slowly but surely, is still underneath this channel, right? So obviously we broke down from the head and shoulders. And then we came down to that 2405 target. We've rallied back up, and as you can see, we've retested the resistance from beneath here on Monday, dropped back down, and we're still underneath that. So based on the S&P 500 movement, it's the longer term trends suggest that it still wants to drop down to back towards this 2400 area. So we'll continue to watch that. But if we zoom in on the short term, you can also see that there's another potential, another little head and shoulders developing there on the S&P 500 in the short term on that hourly chart, which would again indicate a drop back down towards 2410. So we'll see how things pan out in terms of the market's movement tomorrow. But that's basically what the S&P 500 is saying. In the short term, it's still under resistance. In the short term, also forming a possible head and shoulder pattern on the hourly chart. Now obviously, there's been quite a lot of really good movement in terms of the other short side of the market. One of the things that we talked about in our recent Smart Money workshops is the short on gold, GLD, and the head and shoulders there. As you can see, we've came all the way down and now broken down through that neckline, and we are now down to below that level. Dropped on 12.15 million shares on Monday. Again, on a shortened day, the volume was significantly higher than Friday. Friday was 7.27 million. Monday, we plummeted straight through the support on 12.15 million shares, and we rallied back up on only 7.2 million shares, so under resistance on gold as well. So a couple of key things there that are going on. Now, in terms of and then of course that would suggest a possible, if this continues, a possible target on GLD down to 110. Now, of course, it's something that you could look at an option on, looking at buying puts on GLD if that's something you're interested in playing. But obviously, that's got that set up at the moment. So you can see, for example, the puts on that. If you look at, say, the 118 October puts are currently quoted at $2. Oh, those are the calls. Sorry. Let's just get down to the right area. If we have a look at the some of those puts, you could look at 116s, 117s. They're not, obviously there's not a ton of open interest on them. You could look at the 119s, are 425, currently 425. You could look at those. Or obviously the more the more aggressive play would be looking at the 112 puts, which have a lot of open interest, with 2,933 contracts trading today. So you'd be looking at the October 112 puts, which are currently 115. And that may be quite interesting. Obviously, if we get further weakness beyond that 110 to 111 type of target area, that could be a more aggressive play looking out towards October. So there you go. As you can see, there's that head and shoulder setup that we've just started breaking down from today, or yesterday, I should say. So there you go. That's that one. Let's go across to some of the other stocks. CARA, which was the alert from Trading Room on Thursday night, waiting for that to break $17 support. Obviously, we broke through that, hitting that entry signal area. It rallied back underneath resistance on light volume yesterday, and has continued lower today, down another 6.88%. So this one's obviously looking good. These are ones obviously already from the stock report. BRC seemed to have rolled over today as well. Again, Monday up on 118,000 shares, down today on 246,000 shares. So this one's looking good. CLX. also from the report, looking like it's maybe on the verge of breaking down here. You can see it's underneath the resistance of the Head and Shoulders, and has rallied back up to test it, but has not yet broken through. Money flow is still looking negative, so so CLX is holding resistance well. We've got MKC. MKC has rallied up into the resistance zone, straight up into that moving average after hitting its two targets on the way down here on Thursday. Beautiful. It now looks like it may be rolling over again. So obviously we'd originally talked about the July 105 puts, which did really well. I'd currently now look at as a possible secondary entry zone the September $95 puts, which are currently $2.10. MTRX. Actually, no, not this one. This is one on my watch list. Definitely looking on the watch list if it breaks through $10. But this one is has a beautiful fallen angel pattern here, just looking like it might start to break through. So that's definitely on my watch list. If it breaks through that $10 price, I'd have a target of 11.87 on that one, and so that could be a nice little 18% pop from there. So that's been a really beautiful move, and the 9-day support and so forth are behind it. So you could look at a stop signal possibly around 887. That was one. This is of course one we've been looking at as it end. We sent out an alert on this one last week as an earlier entry signal as it went up through 837, I believe it was. So already made a good move, and now a possible secondary move if it breaks higher. HA, Hawaiian, we're still waiting for that to break down, but that one's still looking good. And of course FedEx, also from the newsletter, FedEx doing really well. The back from a pre-earnings alert we sent out. Those are the October 210 calls now up to $14.60 from $11.40. So it is now possibly at a profit-taking area as it challenges this resistance here at 220. So just be aware of that. It needs to break through this 220 to continue. So nothing wrong with considering a partial profit take if you're up nicely on those. On the other, some of the other ones for the longs, obviously MMI also moving really strongly as well after breaking down to out of that falling wedge. Now, in terms of a couple of new ones, let's look at the shorts first. There's Dr. Pepper DPS. DPS is looking good as a short. If it, as you can see, this is. If we go back a little bit. In fact, let's go to the weekly chart. If we go to the weekly chart, you can see that we had this long-term upward channel, which we broke beneath, rallied up and tested from beneath, and have been rolling over. So the DPS was one that we had liked as a short as it rallied up into resistance, or as it breaks down through support. So if we break down below 89.43, we should be able to get down to at least this level of as you can see here at 82.28 or around there. But this would also give it a secondary pattern, as you can see, of a double top. So there's the that would be the first top, creating a double top there, and then you get the first bottom here, and then second bottom somewhere around there. So if that then breaks through support, that we would then measure that and drop that beneath, which gives us the target down here of around 65. And when we do the Fibonacci measurements from where this pattern began to the top, you can see that's also where the 61.8% Fibonacci would be. So on Dr. Pepper, that would give us a second target of 66.23 based on the Fibonacci. So we would basically, and I consider a stop criteria around 92.23. And if I was looking at options, again, there's not a huge option chain, but the $90 October puts are about 320. All right. Next we have WST. West Pharmaceutical Services. Both DPS and WST at ones from our Smart Money FinViz scan. This was one that's just been rolling over at the moment, and if you turn this upside down, you can see it looks a lot like a obviously a fallen angel, which is one of my favorite patterns. And as you can see, so if we flip it the right way back up, we have an opportunity to drop at least down to here, possibly further. So I'd look at a target signal of 88.68, waiting for it to break below 92.87, and look at a stop signal of 95.42. So those are the two shorts I found. Obviously beyond what we've talked about earlier tonight from the newsletter and possible plays there. And the long side, got a few here. We're more weighted towards the short side at the moment, so here's a few longs to kind of balance it out. If you like really having a nice, well-hedged portfolio. GWW, this one, as you can see, is a more expensive stock, and so it's a more larger cap, but great money flow coming up beneath it. I'd look for to break above 185.73, and I'd look at a target to run up just to at least this area, and that's probably being more conservative. Could go as high as 210, and so we'll look at it as it goes along. But I'd look at a target there of 199.83. Look at consider a stop signal around 179.83. And you could possibly consider the 185 calls. October 185 calls are currently $7.80 bid over 960 ask. So we'll see how that how that joins up tomorrow obviously in live markets. Next one, we got four. Oh, excuse me. Well, a few different options. I should say 5 options that I liked. CNSL is a breakout, as you can see from actually a possible head and shoulder pattern. If we flip it upside down, it's a bit more obvious. You can see it just seems to be breaking up out of that inverted head and shoulder pattern with sharp money flow divergence. CNSL, I'd be looking for a break above 22.17 and look at a stop signal around 20.87 and target signal of for first target anyway of 24.67. So we've had a look at a couple of bigger stocks. So now for those of you who we'll get down to some of the smaller ones now. There's MDCA. MDCA I've got on my watch list, and this is again a smaller company, smaller mid cap. As you can see, it's been trading 1 million shares as it broke out back here on June 28th. So I'd be looking for this to break 1023 and see where we and look at that as a possible momentum setup. This based on the flag that you can see there, we could get at least up to this area of around 1168. But could go further than that. So this is the first area that if we break 1023, I look for it to run up to this zone of 1115. And if we zoom in on the hourly chart, we can have a look at these zone setups. So as you can see, we should have some support. Here at 949 as a stop signal. Excuse me. So 949 there is a 947 as possible stop signal. But that really has more potential, obviously, than that. It does seem to be breaking out, and this one is slowly moving upwards. There's also been some insider buying on this one back in November, as you can see. So that obviously helps the case a little bit as well, as if there's potentially some longer-term value that those insiders are buying. Okay, so then we'll get into so we've got 2 larger companies, 1 smaller company, and now we'll go down into the real interesting stuff. RTK, of course, we talked about this in Trading Room quite a while back. Seems to be trying to make another run at pushing up again. As you can see, it's got some support here, forming this nice little base, and so a bit more of a speculative setup. Looking for a break above 57 cents. Look at a stop signal of 43 cents, and this could get at least up to 93, and but could go even higher. So that's kind of what I'd be looking at. and it could be like one of those momentum plays that really gains even more ground. But something you could maybe look at taking a small amount of profit or something like that. This one also has insider buying as well. If we go to RTK, you can see that they had a fair slog from this 10% owner earlier in March. Okay, in the agricultural chemicals area. And last but not least, TROV. Again, another more speculative setup for those of you who like these. It's obviously broke above support here at 120, and did that on some fairly strong volume of 7 million shares. Pulled back to support and had a bit of a rough go there, and then charged up one more time, but seems to be holding that new support level a little bit more adequately here. So yeah, again, very speculative, but possible long here if we just break above today's high of say 133. And I'd be looking at a stop signal of 113, and this would be a possible possible momentum play. And the one thing it's going to have to do is get past these gaps. It's going to have some issues around $1.50. It's also good, so you could look at some profit taking there if you like. Obviously, it's going to, and then from there, we look for that to try and continue moving. But obviously, it's more interesting from a perspective of a momentum play where it can hopefully break through those resistance levels. So I would look to simply update the stop criteria and have allow it to run. But I put a mental or even a possible stop target in here if we look at where this movement came from. This level right here, I put a kind of a mental level there of a 173 as a target. And those are obviously a bit more aggressive, something that you might need a little bit more time. You obviously consider how much you risk in those because they have a larger stop losses. A lot of the setups we look at have like 3 or 4% distance from their signals to their stop signals. Others have, such as this, have more like 10% or more. So obviously decide how much money you're willing to risk when you look at things like this, and if it fits your strategy. So there you go, folks. Have a wonderful night. Happy trading, and we'll see you all in Trading Room tomorrow. Take care.